All right, so really quick on NASDAQ, we were already bullish with our bullish turtle soups that we had and everything along those lines. So already kind of an underlying premise for FOMC. And so when you're able to sweep like this low here where you have a lot of resting stop orders and the day of itself going into the market, you consider your 9:30 open, you immediately start sinking, and that's just going to bait everyone to chase shorts. And then you had that 1 o'clock news, which the news itself doesn't matter. That's not the point. The point is that the news was a bearish move, and that's the only thing that really matters. So you had that, which offering sell side and sell orders is going to allow other people to buy it at a really cheap price. So you already have this huge move underneath, essentially a double bottom here. So there's going to be sell stop orders underneath there, as well as this old low here as a reference point. So you running that 1 hour ahead of FOMC is already an indication that it's trying to go higher. Now, as for FOMC itself, post 2 p.m. delivery, as we kind of get short over here, you can notice that you sweep some highs, and we also know that Jay Powell starts his discussion, at 2:30, and the interest rate comes out at 2, at the top of the hour. So your interest rate is here. So you have stop orders underneath this low that people are going to place for a buy. As if you look at when the release actually came out, it immediately sinks down and then immediately hops back up. Everyone here that is doing this and buying, where are they going to put their stop? Underneath this low. So that generates sell side liquidity underneath that low to basically force a spot where people are going to sell at the market. You run that low, and then you run it again. So anyone that was long here or even long here that rebuys this after the first stop out happens, they rebuy this, their stop is going to be underneath that, they're crushed out too. Happens again, and then this is the most important part. This low coming in and then breaking higher, this gets every smart money person bullish. This gets retail themselves bullish because now they think 3 stop outs have happened. This is now safe to buy, especially after this up move here. Double bottom people are going to buy it. Anyone that needs to feel safe in order to buy it just now did because they had this immediate rocket up essentially. So now this low feels safe, and specifically this one because this is where the low came from is what matters. So people that are up here at the top, their stop loss is going to be right underneath that low. Again, same idea. Sell stops were already gathered here and now here as well. So you already have with an underlying bullish premise already. So you're collecting more and sweeping up more lows as you were just before. And again, people are hopping in once it feels safe. They put their stop order in and then they get taken out. They feel safe, put the order in, get taken out. Feel safe, put the order in, and then they get taken out. And then there are the people that will buy this only and only after they feel safe to do so, after it makes that move away. Similar to this thing here. So again, same idea, it pushes up, generates everyone's stop underneath this low. That's what allows you to be able to buy it when it happens. And if you look at the time step of when it sent the message, that's the reason you send this on at that time at 2:36. You got even people that were willing to buy this and now that felt safe. Stops underneath there. Those people that just bought are now out. And anyone that was buying it prior is also out. So that is what allows the actual move to happen through there. And then you also just have lunch highs as well, which you can use as a target. And then the second move, essentially what I want to point out is the order block that it bounced off of, which was this whole creation here. You have the down candle, sweeping liquidity, closing well above. So you're looking for another down. You're basically looking to trade back to the down close candle as your next buy for another push higher. I was a bit early buying it. I was buying this FVG here, this BISI, after this low was swept, so on this candle, and then as well as this one. But it ended up coming down to the order block. But I could have lived with that, and again, it ended up making the new high anyways, so the whole trade itself was alright. but technically you could argue that it was early. But exact same logic, come back to their block, push for a new high, and then even likely so, we're still more than inclined to keep seeing new highs still, at least intraday and like at least going into Thursday, because we're not even at Sunday's open or gap. I know ES made it, but you're not trying to do these types of moves to go short. And even for the SMT Easter egg people, there's your SMT. ES goes lower low. NASDAQ makes that. So anyone that actually uses SMT, there you go. You also have that. So, but for, again, at the very beginning of the video, these turtle soups happening over kind of the day's range and then doing it again, you don't stop out longs to go short. You stop out longs to go long, just like an FOMC. You're stopping out longs. You're hitting their stop loss at the bottom. You're stopping out longs to go long. You're stopping out longs to go long.